Good afternoon. My name is Robert Sinn. I go by Goldfinger on CEO.ca. Probably the 20 or 30 people that are watching right now, including my mom, know who I am. But I will just say that I've been an investor in the junior mining sector, focused on gold, silver, copper juniors for almost 20 years now. And I wish that this background was a little bit nicer, but I'm in an office in Fort Lauderdale this morning. This is the best I could do. I'd rather be outside in the beautiful weather, but I'm here with you guys because I think this is important to talk about tax loss selling season this year and some of the opportunities that are available to us out there. So while most of you, or especially, the Americans that are in the audience, were celebrating Thanksgiving on Thursday, I was finishing this article that I published a few hours ago on CEO.ca. And it's focused on 6 companies that are all beaten down quite a bit year to date, well off their year to date highs. And I don't want to really have myself on the screen for much longer, so I'm going to share my screen, and we're going to take a look at the post. So hopefully everybody can see this. So this is the article that I published a few hours ago. And every year at this time, sometimes it's the end of November, sometimes it's a week or two later. It's changed the last 4 years, just all depending upon how I feel the opportunities are, sort of how the sector is going. And this year, it seemed like we had seen the worst of it a few weeks ago. And while some stocks definitely bottomed in early October, others, especially the ones I've highlighted in this list, have continued to get hammered, just because, for whatever reason, they're lacking the news the market wants to see. They've got a lot of shareholders who are not happy, who bought at much higher prices, and they just want to book the tax loss at year end. So just to explain that, it's a very basic concept, but maybe some of you would like to understand a little better. Every year, we pay capital gains taxes, especially on short-term gains. So maybe we bought a stock in January, it went up a lot by May, we sold it, we took a big profit, and now we have a tax liability as soon as the year comes to an end that we owe the tax authority in the following year, right? And so the final weeks of every year, there's this opportunity to look through your portfolio and see what you have a loss in, short-term loss to offset the short-term gains, or long-term loss to offset a long-term gain. So people don't really even think very much about the quality of the company or the opportunity that might be available. They just dump the stock because they don't want to have to pay that they don't want to have to write that check to the IRS or the authority in Canada, because it's an unpalatable proposition, right, to pay taxes. So everybody wants to reduce their tax liability as much as possible at year end, and so that creates a situation in the junior mining sector at the end of every year, the final couple months of every year. Although I think this year it got started much earlier. I think people were selling a couple months ago to take their losses. And also just the way this year went, where we had some very big gains in the first half of the year in this sector, and then we had some very big losses in the second half of the year. And so just sort of how this year has played out, I think it's made this tax loss season a little bit different than past years. And also, of course, I wasn't planning for there to be some new crazy COVID variant that came out here. I just figured the Friday after Thanksgiving, it was a good time to put out this list and give people the weekend to think it over and do some research, and then maybe they'll pick up some of these shares at good prices the following week or two, right? So let's just get into this article. I won't make this too lengthy because we have limited time here this afternoon. So the criteria for the list is that the stocks are down year to date, well off their highs for the year. And as you'll see, some of these stocks are not just well off their highs, they're 70% off their highs. And, why are these stocks not doing well? Like, why are the six, that I chose for this list, why have they had such a bad year in the market? A lot of them have had issues with not being able to carry out their plans in terms of the projects that they wanted to explore, labs. So they may have carried out a phase 1 program or a phase 2 program on a project, and they're still waiting for the assays, or they never even got out there to drill in the first place, as we'll see with a couple of companies that are still waiting to go out there, with a crew and a rig and drill. Also, I think that a very important thing, and honestly, this is something that a lot of market commentators do talk about, but I want to really stress it. High expectations are fertile soil for big disappointments, especially in the junior mining sector. And then the flip side of that, which is really important for this topic of this webinar, low expectations are fertile soil for big upside surprises, right? And so most of the companies on this list had very high expectations in January of this year. Pretty hefty market caps, relative to the stage of their projects. And that just created a situation where there wasn't much margin for error. And there were a lot of errors, not necessarily the company's fault, but when you disappoint and you don't meet your milestones on time, or you don't even meet the milestones period during the year, then people are going to dump your stock, right? And also, I think a lot of investors think that these 6 stocks, there's not a lot of opportunity cost to selling right now, that they'll be able to buy back in January. So they're just selling now, and they'll see how things pan out, and then they might even have the opportunity to buy at cheaper prices in the new year, right? I really do think that all 6 companies on this list have opportunity to have great years, next year. And I think with some of them, we might even get news in the next few weeks. Hopefully it's good news. I don't know, but clearly the market, if you just look at the charts of, Vanstar or Angold, just to pick 2 out of the list, the market isn't really thinking that anything positive is going to happen anytime soon, right? So even though Vanstar did a program, they drilled 2,000 meters at the Felix project based upon, and I'll just skip down to Vanstar to show you the chart. Based upon the slope of this chart, the market is not very optimistic that the quality of those assays is going to be good, right? So there's opportunity for upside because the bar is now set so low for most of these companies, right? And obviously, when a company does not meet expectations for an extended period of time, a year or more, they kind of become a show me story. They have to prove it to the market. They have to prove it by putting out good results and meeting key milestones on time. And so that's something that's going to be really important to happen here if these companies are going to turn things around in 2022. And this post is just an idea list. It's a list of ideas. I get to the salient points that I believe make these attractive propositions at their current valuations. And it's an opportunity for you as an investor. I mean, obviously, if you're watching this, you care about the junior mining sector. and you're probably an investor in the sector. So it's an opportunity for you to dig a bit deeper, maybe try to have a phone call or a Zoom call with the CEO and ask some tough questions and see how you feel afterwards. And then it just so happens that I chose companies that are really focused on the Southwest of the U.S. Two good places to have a mining project. So here we go, Gold. And by the way, please submit any questions that you have in the chat box on your screen, and I will try to address them at the end of this conversation. I'm not going to exhaustively go over each company, but I'm going to just talk about some things that I think are important, about each one. So Gold, classic example of high expectations, really good management team, sort of a star-studded team, especially, the advisors. And I think that a lot of people were in the 40-cent financing, the $8 million financing, and were just kind of planning to take profits very quickly. And that's sort of what happened early in the year. And then the news flow in the middle of the year, and definitely in the last few months, did not meet expectations and timelines. And so we just have this deluge of selling in the last few months. The company will need to raise money early in the new year. There's no doubt about that. They have just over $1 million, left in the treasury from the $8 million or so that they raised at the end of last year. That's maybe also something that shareholders are not terribly happy about. So that's what happens. A lot of people dump and they assume that they'll be able to buy back into the private placement. First of all, I have no doubt that this management team will be able to raise the capital that they need. There's no doubt about that in my mind. It's just a matter of what price and how many shares they have to, issue, and are there going to be warrants involved and all those wonderful things, right? So that's why it's trading at 14 cents, down from 53 cents earlier in the year. So we're talking about a major market cap cut of about $30 million from high to low. It's nothing to sneeze at. And I want to talk about the iron this project, their flagship project near the Battle Mountain Trend. So this project has a near surface, oxide, resource of several 100,000 ounces, but the grade of the resource was 600,000 ounces at 0.62 grams per ton gold. But the grade and the size is not enough to really be economic. I mean, if this was 2 million ounces at 0.62 grams, in oxides in this location, it would be very good. But at 600,000 ounces, I don't think it's economic, but it's a nice starting point to start the conversation. And then the interpretation is, if you go through their presentation, that they think that this needs to be drilled to depth. Most of the drilling has been relatively shallow, a couple hundred meters or less, and you can see that in this slide where it's open at depth. And there appears to be some evidence, and obviously this needs to be drill tested, some evidence that there could be a low sulfidation sort of epithermal system here with a boiling zone that is hopefully intact and hasn't been tested yet, with a drill. So this is a very interesting theory, because if this is the case, if they're able to drill, into the sweet spot here, so to speak, then suddenly that 600,000 ounces might be a lot more, maybe over 1 million ounces, maybe 2 million ounces. And in these sorts of systems, the boiling zone, so this sort of sweet spot area is going to be much higher grade than 0.62 grams per ton. It could be 5 or 10 grams, possibly even higher. Who knows? But it's a very interesting theory, and it needs to be drilled. I mean, it has to be drilled. So it will be drilled in the new year. And considering the beat down that this has had and the valuation, which I don't know, I think it's about $12 million market cap. I think there's a lot of potential at the very least, even just for a trade as they get ready to test this flagship project in March. Yeah, let me just scroll down here. So here it is, February, March 2022. They will drill their flagship project with a phase 1 core program about 3,000 meters. And the intention of this drill program is to test those targets here at depth into this area where there's some evidence, there's definitely some smoke that there could be a higher grade zone here, right? Obviously, if that doesn't pan out, then back to square one. But if it does pan out, then the company is worth a lot more than $12 million. It could be worth over $100 million quite easily, right? So even if you just buy now or in the next few weeks with the idea of holding into the new year, into February, as they prepare to test those targets at depth, you might get a trading opportunity. Now, obviously, there's a few things that have to happen, including a financing, so there is risk. But I think it's a pretty nice trading setup at the very least. And I'm not even talking about the rest of the other projects because we could spend the whole time on that. So then skipping to the next one, we have Elevation Gold Mining, which is a roll-up of Eclipse and Northern Vertex. Their flagship project is in Arizona, the Walker Lane Trend of Arizona in the northwest part of the state. I visited this project, I believe in May of this year, and I was pretty impressed. It's not often that you get a gold mine, fully permitted gold mine, with infrastructure, with modern day brand new roads in Arizona, a couple hours south of Las Vegas. You have hotels like 5 or 7 miles away from this mine, modern hotels. You have golf courses. It's pretty interesting, setup. I mean, when you're used to going to Latin America in the middle of the jungle, or northern Canada where you're freezing your ass off and there's no cell service, it's really a luxury to be able to just go to a mine like Moss and you can stay in a modern hotel, you can have internet and cell service, you can drive 5 miles to the mine, and it's first world, right? That's the good news. And the good news is also they have a huge property package that is relatively untouched, certainly in the modern era, with a lot of really juicy targets that I talk about in this post. In particular, these targets down here in the southeast that will be drill tested in Q1 2022. I guess the bad news is that the market really doesn't like this company for I guess a number of reasons. The first one being the chart and the performance. I would also like to see management sort of open up their checkbook and buy more shares in the open market. As far as I know, there's not a financing coming here, but who knows? It's possible, especially if the mine is not operating, up to snuff. It's always a possibility. But as far as I know, there's not a financing coming here, and the company does have ample cash in the treasury. But it's a small mine, right? So they're 10,000 tons a day at, let's say, just ballpark, a 0.5 gram gold grade on average. There's some parts of the pit that are higher grade, 1 gram or 2 grams, and there's other parts that are lower grade. You put it all on average, and it's probably between 0.4 and 0.5 grams per ton. But it's oxide and it's heap leach. This is very standard stuff in this area of the world, and it's profitable. So even though it's not incredibly profitable, this is a profitable mining operation, and obviously they're working to lower costs, and obviously a higher gold price, a higher silver price would increase profits. As you can see 1757 gold price and 2210 silver price is what they use in their mine economics to get these numbers. And this is really actually where the market cap of the company is right now. It's right here. So if you think gold and silver are going to be worth more than these two prices, then seems pretty attractive to me. And then you get everything else. You get all the property package, all the exploration, upside available here for basically nothing. Seems like a pretty damn good deal to me, but obviously not many people agree based upon this trend in the chart, right? And as I said, I'll just throw this out there again. Maybe management is watching. It would be nice if management stepped up and bought more shares on the open market here, especially around $1. I think it would do a lot for the confidence in the market, and probably have other people take a closer, look at the opportunity here. Then we have Outback. So this one is one downtrend to the next. With Outback, amazingly, this stock was well over $1 earlier in the year, and recently it's 20 cents. So you're talking about an 80% drop. And I think this is also another example of really high expectations. Again, sort of a star-studded management team and some good marketing of the deal early on, sort of saying like, hey, we have a project called Silver Spoon, which is adjacent to Fosterville, one of the most profitable and biggest gold mines in the history of the world, right? And that's sexy. That's a very sexy pitch, right? But until it's drilled and until it proves to be worth something, I'm not sure it's worth $60 million market cap or $70 million straight out of the gate. And so that's kind of what happened here, is really high expectations. And then Australia has been a disaster in 2021. Very difficult place to work and operate and live. I'm not going to go into that into that topic, but COVID has clearly been a major problem for Outback and other companies operating, in Australia. It caused them to have to put off a drill program for, 6-7 months or something. The market really did not enjoy that news. And so here we are, at a $12 million market cap with $6.5 million in the treasury, with a stellar management team and the same project portfolio that warranted a $60 million market cap straight out of the gate at the start of the year, right? So the only thing that's changed is the price. The price has gotten super cheap to the point where I couldn't not put this on the list, right? I just felt like it's too good of a proposition. And you've got big names here. I mean, this Perry guy is a big name in the industry. He's done really, really well. He knows how to win. He's got a lot of money, and he's buying the stock on the open market. Okay, so follow the best. You probably are going to do well more often than not. Okay, and he's among the best in the business. So you have news flow just lined up, bang, bang, bang. We're waiting for the results from Ewan. I'm not sure if I'm saying that correctly, but they did do a phase 1 program there, and they're waiting for the assays, and then they'll have phase 2 drilling early in 2022, God willing, right? And then Ballarat West is actually probably, of these projects they have, with Silver Spoon being the Fosterville pitch. We're right next to Fosterville, et cetera, et cetera. I think that Ballarat West is actually the sexiest project in their portfolio, and they're going to drill that in March. So I'm not going to go into all the details of the projects, but there's a lot of upside here. All they have to do is hit on one of them, and the stock is worth a lot more than 20 cents a share. So you got a bunch of whacks at the ball here in 2022, with a top management team, strong financial backing, low valuation, and they don't need to raise money. They have $6.5 million still in the treasury, so it's a damn good setup. in Outback. And again, it's available at this price because it's had such a bad year in 2021, and so many shareholders who got in at much higher levels are pissed off and they just want to take the tax loss, right? So what is a loss for them is an opportunity for you and I, right? Ridgeline, not quite as bad as the other ones in terms of share price performance, but also a very steep downtrend since June. It peaked at 70 cents a share in June. It's at 31 or 32 right now. I was buying at 34 and 32 and a half this week. You have a really good CEO here who cares a lot about this company. It's his main focus. He cares a lot, and you can get him on the phone. You can ask him anything you want. He's a straight shooter. And they've got 4 projects in these 2 trends, including the Carlin trend, including the Carlin East project near Barrick Gold's multi-million ounce gold mines. These projects have a lot of smoke. I think that they're going to hit something big on at least one of them. That would be my bet, and that's why I bought the stock here. And you have news flow lined up. So just like with Outback, you have news flow lined up over the next 6 months. You can go into these things about the different projects. They definitely have some pretty cool targets here that they will test in the first half of the new year. The company has $2.3 million in cash in the treasury. So yeah, of course, they're going to have to raise money in 2022 to be able to work on all their projects. But they don't have a gun to their head that they have to do it right now. They could probably wait till February, March if they had to. They've got assays pending from one of their projects that are due to come out over the coming weeks. And then obviously there's a drill program that's about to be started in their JV project with Barrick and Newmont. So pretty exciting stuff here for Ridgeline. And again, this is just an example of a quality management team, great projects, great assets, trading at a pretty attractive valuation here, primarily just due to the sector being out of favor and people just taking tax losses here. Trifecta Gold, this one is not very liquid, so I wouldn't put out a 1 million share market buy order unless you want to make a bunch of other people very happy. But I think this is one you could pick up at maybe 6.5, 7.5 cents a share. On the bid, just be patient. They closed a $2 million financing at 10 cents 5 months ago. They still have 1.8 million of that 2 million. This is a company that does not blow cash very easily. The CEO definitely cares about shareholder value. He's been buying on the open market as recently as yesterday. So you get to, if you bought this at 6.5 or 7 cents, you're getting it at 30% under where investors put $2 million into this thing just 5 months ago. What has changed in 5 months? The projects have only gotten better in the last 5 months, as you can see by what I wrote here, and the results that they put out in the last 5 months. So things have only gotten better. The only thing that's changed is investor sentiment and lack of patience, right? So you get to arbitrage that and have the opportunity to get in at a very attractive share price. Their 2 main projects are here and here. The Yukon project is actually really, really sexy, and it's surrounded. The project is in an area where there's a lot of mining of the gravels, right? So these streams are full of gravels, and the gravels have gold in them, right? And just in the last few years, tens of thousands of ounces have been mined from this area out of the streams, the streams that are all around their property package, right? So the gold in the streams came from somewhere, right? It came from somewhere. It didn't come from the streams. It came from somewhere that was higher up. It came from a hard rock source. This is a very simple concept in mining and gold mining. And it's most likely this gold in the streams came from their property. And I wrote that here. There's most likely a lot more epithermal veins, high grade gold veins on their claims. They need to be drill tested, and they will be. Just things are a little slower now in the Yukon due to COVID, right? So we will get some news here over the coming weeks, and then they'll be back out at huge early in the new year to do a phase 2 program to test this zone, and this zone. Yeah, so I've got all my shares from the 10-cent financing. I've been buying more shares in the open market at 7 and 6.5. And this company is a sponsor of mine. And then the final one, Vanstar Mining. So this one sort of came out of left field for me because I met with the CEO at a conference about a month or so ago. And I was just really attracted to how cheap it was, considering that they have this carried interest in a multi-million ounce gold mine in a tier 1, location, in Canada. I think that this carried interest in this project is worth more than the entire market cap of the company right now, right? So I think the downside risk is pretty damn low. Knock on wood, it's junior mining. Obviously, there's always risk. Stuff can happen that you don't see coming. But if you just think about it, they have a quarter interest, 1/4 interest in a 3.2 million ounce gold mine in tier 1 location, grading 1.02 grams per ton. The resource was done in 2019. Using a gold price that is $400, $500 less than the gold price is right now. So you could definitely lower the cutoff grade maybe to 0.4 grams per ton, and maybe that would bump up the resource to 3.5 million ounces or more. So it's a big gold deposit in a great location with infrastructure. I don't need to go into all those details because I do want to get to your questions. And then they have a bunch of other projects as well. So you get the other projects for free. Company has over $5 million in the treasury right now, so they don't need to raise money anytime soon. And remember that IM Gold is paying for all the work on this flagship project because they have a carried interest in it through feasibility and the start of mining operations, right? So that's the list. Those are the 6 companies I chose. It took me weeks to really narrow this down. I had about 24 stocks in mind at first. There's so many stocks that have been beaten down that are tax loss candidates. And I want to sort of end by saying that expect these stocks to be really volatile in 2022. So I would not be surprised if at least one of them has a huge year. Just absolutely knocks it out of the park, right? And I would also not be surprised if a couple of the stocks on this list continue to suck in 2022, just because that's how the sector works. If you have one big winner out of 5, you're doing pretty well overall. So I would expect something similar out of this list. But I also think there's going to be a lot of trading opportunities on this list. So if you're shrewd, if you're tactical, if you buy low, I think you'll be able to sell higher at some point in the first half of next year. And again, don't risk money you can't afford to lose. It's important to understand that this sector is wildly volatile and goes through huge sentiment swings on a regular basis, just like we're seeing now. I mean, who knew that this week was going to be, seeing gold drop $100 an ounce, even after a new COVID variant, is found, right? So with that, I will move to the questions. And let's see, I will stop the screen share so you get to look at my face. Oh, so we have a question, which I think is interesting for the 30 people who are left here. Has the junior mining sector seen its lows for this tax loss season, or do we see lower levels in the coming weeks, right? Most people think that we're still going to go lower. Interesting. So if you haven't taken the poll, go ahead and take a stab at it. I think it's interesting to see, what people think. We have a question about elevation mining. Yeah, so he's asking about the infrastructure and basically that some of the mining infrastructure at site is actually in an area where there's gold, so they could mine the ground where they have a lot of heavy equipment. But the problem is moving that equipment is costly and not simple, right? I don't really have any thoughts on that. I'm not a mining engineer, but I would not be surprised if they do expand operations, and they do, especially if they prove up more than 1 million ounces, in the next year. I would not be surprised if they expand the mining operation, including the throughput, to 15,000 tons or 20,000 tons. So that could involve changing the layout. I don't know anything about the royalty on, Nelligan. I think it's a nice value for shareholders that they have in their back pocket. I would not be surprised if somebody made them an offer, especially once a feasibility study is done. I don't really have any silver plays. I just want to talk about this list. You can follow me on social media. You can read my blogs. I do blog and talk about silver stocks from time to time. I think Mag Silver is very interesting right now. I'll just throw that out there, especially after it's been sold off so hard in the last couple of weeks. Clearly, the market's not happy that they had to raise more money. But I really like the projects. I like the management team. Maybe this is an opportunity to buy Mag Silver on the cheap. I don't know. Just an idea. It's a silver stock. And then I'm asked a question: is gold or copper my favorite metal? How about if both are my favorite metals? I think there's a place for each in a portfolio. Copper is an industrial metal, a base metal that we're going to need a lot of in the world over the next few decades as we upgrade the power grid around the world and we build out new infrastructure and improve infrastructure, especially like in the US. The major cities in the US really haven't seen a big upgrade to their infrastructure in more than 50 years. So there's going to be a lot of money spent on that. We're going to need a lot of copper. So I think copper is in a major bull market, and I think gold continues to be a monetary metal, something that is very real, a tried and true store of value in a world where so much is intangible, so much can be printed or just made out of thin air. Gold is very real. Gold is a store of value with no counterparty risk that has been part of the fabric of humanity for over 5,000 years. It's not going away. So I like gold and copper. And the stocks, the mining companies, are a whole different story. And they require careful analysis and, risk management. But as far as just the metals, prices are going to go higher over the coming years. I'm pretty confident of that. So we're almost out of time. Let's see, one more question. Yeah, I think it's really important that most of the companies on this list have plenty of cash and they don't need to raise money anytime soon. And so they don't need to dilute shareholders at this share price, at these beaten down valuations. And if need be, if we think back to March of 2020, where the world froze for a couple of months, if need be, they can also just freeze expenses for a couple of months and just try to keep the shareholder capital and not spend it until there's more clarity, right? And I don't think that we're going into a March 2020 situation again, God forbid. But worst case, these companies have the cash to weather a storm, as long as the storm is not too lengthy, right? So yeah, I hope that you got some value out of this. I definitely would appreciate you sending me any questions or any ideas for future webinars or content, and any feedback that you have about this year's tax loss shopping list or this webinar. I'm definitely open to it. And have a great weekend, and take some time to do some research and follow these companies on your own. So with that, have a great weekend. Thanks a lot, guys.